Hey everyone, welcome back to Corporate Decoder, the place where we decode corporate filings so you don't have to. Today we're diving into a report from Lava Therapeutics. This report is not exactly a happy Valentine's Day card for the company. Let's see why. Lava Therapeutics, a company with a name that sounds like a cool sci-fi project, is actually in the business of cancer treatments. And the news in this report, they're hitting the reset button, so brace yourself. Scroll date of report date of earliest event reported February 20, 2025/scroll. First things first, this report dropped on February 20, 2025. It's a Form 8K, which is basically an urgent update a company sends to the Securities and Exchange Commission, or the SEC, about big changes. Alright, let's dive straight into the deep end. Lava is restructuring its business. Restructuring is when a company makes big changes to its structure, kind of like rearranging furniture in a house, but with potentially bigger consequences. Why? Because they're kicking off a process to look at strategic alternatives. In plain English, they're exploring their options, and those options could include anything from selling the company to merging with someone else, or maybe even changing their entire business plan. Now for the part that's never fun, job cuts. Lava is planning to reduce its workforce by about 30%. That's a significant number, and it means a lot of people are potentially losing their jobs. The company expects this to be done by July of 2025. Of course, this all comes with a price tag. Lava estimates it will cost them around $0.5 million, that's $500,000, for things like severance packages and related taxes. Most of these costs are expected to hit in the first quarter of 2025. Moving on, there's also something called Regulation FD disclosure. Regulation Fair Disclosure is a rule that says companies have to share important information with everyone at the same time. No more whispering secrets to some investors before others. In this case, Lava issued a press release saying they're evaluating their strategic options, which we talked about earlier. This press release is included as Exhibit 99.1. Scroll trading. Symbol/scroll. Lava stock trades on the Nasdaq under the ticker symbol LVTX if you want to follow the stock prices. Scroll risk factors in the company's annual report on Form 20F/scroll. Now, the report has a cautionary note regarding forward-looking statements section, which is basically a disclaimer. It's saying, hey, we're making predictions about the future, but things might not go as planned. They mention some factors in their annual report that could affect things. Alright, let's dive a bit deeper into those strategic alternatives and what they might mean for Lava. The company is facing some serious headwinds, like many other biotech firms. They're burning through cash, developing new drugs is incredibly expensive, and the market can be very unforgiving. So, when a company starts talking about strategic alternatives, it's often a sign that they're feeling the pressure. They might be struggling to raise more money, their drug pipeline might not be progressing as quickly as hoped, or they might just see a better opportunity to sell out to a larger player. In Lava's case, the workforce reduction tells a story of a company trying to conserve cash. Cutting 30% of your staff is not an easy decision, and it suggests that they're really trying to tighten their belts. The $0.5 million in termination costs is a drop in the bucket compared to the potential savings from reduced salaries and benefits. Now, let's talk about the potential outcomes of this strategic review. One possibility is that Lava could be acquired by a larger pharmaceutical company. This could be a good outcome for shareholders, especially if the acquirer pays a premium for the company. It would also provide Lava's drugs with a better chance of reaching the market, as the larger company would have more resources and expertise. Another possibility is a merger with another biotech company. This could create a stronger, more diversified entity with a better chance of success. However, mergers can be risky, as they often involve integration challenges and potential clashes of cultures. A third option is that Lava could decide to continue operating as an independent company, but with a revised strategy. This might involve focusing on a smaller number of drug programs, partnering with other companies to share the costs of development, or raising more capital through a stock offering. Finally, it's also possible that the strategic review could lead to a less favorable outcome, such as a bankruptcy or liquidation. This would be the worst-case scenario for shareholders, as they would likely lose their entire investment. So, what's the bottom line for Lava Therapeutics? Well, it's clear that the company is at a crossroads. They're facing some significant challenges, but they also have some promising technology and a team of talented scientists. The outcome of their strategic review will depend on a number of factors, including the interest of potential acquirers, the availability of financing, and the progress of their drug programs. Now, for my take on this situation. Lava's current situation looks a bit precarious. The restructuring and the search for strategic alternatives suggest they're facing real financial pressure. The good news is they're actively looking for solutions. Assessment of company direction, weak. The company is facing significant headwinds. Notable risks, failure to find a strategic partner, further financial strain. Notable opportunities, acquisition by a larger company could unlock value. In conclusion, Lava Therapeutics is a company in transition. The next few months will be critical in determining their future. Thanks for watching. If you found this helpful, please like and subscribe for more corporate deep dives.